Hey, Web3 Weekly with your host, Blockstars.
Hey everyone, welcome to episode 58 of Web3 Weekly podcast by Blockstars. So today I've been joined by lovely Maureen.
Hello.
Very Christmassy Maureen.
Yeah.
So so welcome to all the our social media, all the users from our social media. So today we're going to talk about real world assets.
Yes. And so obviously in our office, Cozy has been the expert in real world assets, haven't you?
Oh.
Going around and giving some really great presentations.
I think that's. I feel like that's a. I mean, we had the NFT, we had the DeFi. I feel
Yeah.
like this is the next iteration. So, and I had to say, like, here, we had a few discussions with potential clients and clients as well about how the tokenization of real world assets going. I think there's a lot of what we call chit chat out there.
Yep.
So with your help, Maureen,
Yep.
let's get into it.
Okay, good, because I have a question for you, Cozy.
Oh my
Just
god.
the same way that we saw the NFTs take off, and
Yes.
it was, some people saw it was a big bubble, and you said it's the next iteration. Do you think that because it's going to be a bit of a phase of a new thing, we're going to see people trying to make absolutely everything a real world asset?
Everything, that's a big word, but I would say anything that they see value in, like whether it's um, fine wine, luxury watches, cars, ships,
Yep.
and I think the low hanging fruit, not low hanging fruit, but I think the people could say anything of real estate. So I feel like there will be people will be looking at tokenizing anything that they see like, oh, there's some good value in it,
Yeah.
rather than um, and also not they're like physical, but also the non-physical, like time, that can be tokenized.
You can tokenize time.
Yeah.
What do you mean?
Like say for example your professional services, for example, right? So or legal services,
Yeah.
I could tokenize those hours like a sort of like a, in other words, like NFT. So you
That's
can
a
give
new
that.
one to me.
Yeah.
Tokenized time. I don't know. I kind of have a feeling that we're going to see, number one, just like
Mhm.
NFTs, there are going to be some really cool use cases for like tokenization of real world assets. I can definitely see potential when it comes to like fractionalizing real estate and other big value assets. It makes sense. But then I can also see that, there's going to be those occasions where people are going to go tokenize like their pets or like their shoes, weird things
Yeah,
like
shoes,
that.
that's luxury item.
Yeah, well,
I mean,
Nike
all your
did do it.
shoes, all your shoes.
Hey, let's not bring my shoes. Okay, I know that Nike did it, and we're going to have
Yes.
like examples of like digital twins and
Yeah,
all that stuff. But then I feel like we're going to jump around the whole place
that's
with this
okay.
podcast.
Yeah.
But I think it's going to open up the floodgates gates of who validates these things. So, like, what are some of the things we're going to have to look out for when we think of real world assets?
Okay, I would say if you tokenize a luxury car or even wine, right? First of all, you have to know, okay, this wine, it exists in real world.
Yeah.
So you need provenance. You had to have like, okay, so you had to authenticate first of, okay, is there a bottle of wine there? So that's where the trust factor comes in, because it's not on chain yet. So we had to rely on the trust-based frameworks. Now, how would you do that? Then for authentication, and you have to get the provenance as well. Like, where do you get the provenance from? So the provenance is where you get, okay, when was this wine corked or bottled, not corked but bottled, or where it came from. So that has to be validated as well. So I would say that can be a valuer could value that and confirm that. Once you do that once, and then you put that.
So before you jump on, so another word for provenance, we would probably say that you would have to establish
ownership.
So that
That's
might
exactly
be like a title or a deed.
100%.
What next?
Yes.
Yeah.
And once you do that, then you go into fractionalization of that.
Yeah.
And that's when you have to go to a platform that is trustworthy, because it's not just being decentralized. Here we need the centralization of that trustworthiness. So once you fractionalize them, then you have to go to the trading part. So those
Okay.
are the 4 steps.
So before we actually issue the tokens, is it necessary, and you may or may not know
Hmm.
this, is it necessary to have a smart contract in the tokenization so you can establish like the rules or the terms of the tokenization ownership structure? Is that something
Yep.
that's necessary, or
There has to be somewhat that in there. Again, if you think about this tokenization,
yeah,
there will be some will be tokenized on a decentralized ledger,
yeah,
but there's also more centralized as
yeah,
well. Now if you think about decentralized, the only thing with the decentralized ledger,
yeah,
like what you said here, like that law, everything will be on the smart contract, but then there will be things that kids can't own.
yeah,
So even though you're the KYC and everything else, but when it come to being a decentralized aspect, anyone can buy, get it. Anyone can create spin up a wallet
yeah,
and own that asset. So if it's tokenizing sneakers, like our Nathan's
yeah,
sneaker collection or your shoe collection,
yeah, on my handbag
handbags,
today.
exactly right. In that case, there's no issue whatsoever because it doesn't have to be like kids and any
Yeah,
special things like that. But when it comes to property and alcohol and
yeah.
all that sort of things, then you need that.
I feel like I'm just going to throw this out there, and it's just a thought because obviously starting to really learn a lot more about this topic. Do you think that, given the nature of some of the things that the best use cases of real
Hmm.
world assets, that a lot of the systems that we're going to see in place are going to have to be centralized because of the value of some of these assets? We're going to need to register the tokens
100%.
because I've read a few places, some jurisdictions do get you to register. We know
Hmm.
that with property, you're probably going to have to register it. If a token is paying out money and it's a security token, all of these things are going to be registered. So, are we going to see like a centralized system?
I would say there'll be more and more centralized
Yeah,
systems. There will be the decentralized aspect to it for certain things, where, like, I don't know, art, that can be decentralized. Um, but other things might not be because, again, like when it comes to decentralization,
yeah.
tax.
And with the registering it, is it going to have to be registered before it can be traded? Is that right?
Well, at this moment, there might not be, but we know that that's where we are going, right? I mean, the law. I would rely on you
Yeah.
to help me with that.
All right. So I mean, I think we've heard a lot of our fellow Australian lawyers talk about it. We know that one of our
Mm-hmm.
colleagues is great in the space of
Yep.
um, what's his name?
Jabs.
Jeps, that's it.
Yep.
I don't know too much about it. I know the Corporations Act is starting to talk about it. ASIC is obviously very interested in it. We're seeing globally, there's
Hmm.
still a lot of not alignment, but I think that we're going towards that. But what do you think is it going to take for the next, not bull run, but
Yeah.
what are we going to see? I know real estate's going to be huge. I think we can agree on that
Mm-hmm.
because it's a system that's old and broken and it's just ripe for disruption.
Yep.
What other things do you think?
What other things? I would say once these things cause, I mean, like more people know about EFTs than more than anything else at the moment with
Yeah,
everything going on with BlackRock. And like 6 months ago, I didn't know much about EFTs and BlackRock, but
yeah,
I think now it's just like the street talk, right? So once I would say when we are looking at those types of bringing those digital assets into the more like the retail
yeah,
investors, the retail investors going to come up and find out, oh, we can tokenize all these different things, not just property. Now property in the Western world, is quite straightforward,
yeah,
very straightforward, because everything, all the borders are all marked with satellite.
yeah,
So we know exactly where our border starts and border ends. But still, we have neighbors, fighting our borders. But when you go into more developing countries, the borders are very fluid.
yeah,
They go down and up constantly.
yeah,
So even though they do surveys and that's not so, I guess when it comes to real estate side of things, when it comes to those countries, it's a little bit more challenging. But I think that's where everyone has to agree. Okay, let's start from one place
Yeah.
and put that on the blockchain, and then after you get that information onto a blockchain that everyone trust. First of all, you trust that one,
Yeah.
but after that, then you need to trust.
So it's funny, this thought has just come to me. Like,
Mm.
obviously, when we think about fractionalized ownership of real estate and these real world assets and tokens, a lot of the reason this idea, like one of the inceptions of it came about, was because real estate has gotten so expensive. The next couple of generations are probably going to really struggle to buy property. So the idea was, why don't they buy a piece of it?
Mhm.
But I mean, I think that even as a lawyer, when we look at property, we know that how many disputes can come about, with property ownerships and disputes. And you can just imagine, say, 100 people have a piece of the same property.
Yeah.
How would we build into a token? How would we deal with that?
Look, I think technically,
Yeah.
it's very straightforward. So I would ask you the question: how do you go about that legally?
So probably a governance token. I guess we'd have to, if legally, we'd look at building in those terms and conditions. And I mean, I guess this is where the law is really going to struggle with, because it's going to have to protect people's interests. It's going to have exit strategies, even though you can trade them easily. I think when it comes to things like maintenance or taxes or rates or anything that comes up, even tenants. So I think that if you were to execute this really well, you would have to consider such an array of things and then look at global jurisdictions and how trading would be affected. But I guess a lot of the real estate is coming down to being more of a stock token.
Look, we had to also think of, like, okay, what if someone passed away who owns those tokens? You should be able to move those to the next person, and then so there has to be a legal structure, has to be built, like a framework needs to be built around. So that's why I'm thinking, like, we can, as much as it's decentralized, you look at a more centralized framework in this situation. And okay, so what happens if the kids are under 18, for example? Who holds it? Then the lawyers. So again, like, there's a lot more. I think I would say in the next, maybe, I don't know, who knows, like, probably it will take about a decade to really sink in. But
And I would say on that point that would probably a point that applies to any sort of cryptocurrency, and we're looking at succession and probate. And then, even though the whole thing about cryptocurrency was for like the decentralized, sovereignty of your own money, no one is going to want that if no one can access it in their absence. So we're going to see a lot of custodial things built up, the middleman. I feel like we're going to almost do a full circle. There's going to have to be a backdoor entry, because if you look at the value of some of these things and the potential for some of these things, how are we going to deal with an incident of someone passing away, or an accident, or losing keys? Like, you don't want to be, once you start playing with big money and big property.
Yeah.
So
I mean, look, when it comes to those type of situations, I'm pretty sure there will always will be that who are purists, right? I say, like, the wine sommeliers and the people who drink wine from boxes, right? And if you think about it, they're like, there's always a place for everyone, right? And we know there are more wine, sort of box drinkers than the sommeliers, right?
Sugar than tea.
Yeah. So what I'm thinking is, how, the majority, I would say, what, maybe 19, maybe 99%, more than that, will be centralized. So that way they'll have those gates in place, so that you'll never lose those completely. And also, when it comes to decentralization, you can always put something like, okay, like, if I don't confirm this every month, then those assets get transferred into a secondary wallet. It could be a dependent, or a lawyer.
Yeah, I think so.
That's
why we will never go out of business.
You'll always find a way.
So right before the show, I quickly jumped on and I was like, I wonder if there's any like really, really good successful real world asset projects around the world that we can talk about. And I looked up these here. So what we're seeing is carbon credits, surprise, surprise, has been very successful. A company
Yep.
called Klima DAO,
Mhm.
they've tokenized carbon credits and they've sold to investors. So now people are able to offset their carbon credits through things like real world assets, which is crazy. Another example is royalty programs.
Yep.
Air Asia, did you know that?
Now do you know
I
that?
had no idea. Air Asia has tokenized their loyalty programs, and they use big points
Yep.
to sell to investors that they can redeem for flights and other rewards. So I guess, what would you say? How are they being used in that sense?
I guess for the end users,
Yeah.
they don't need to know it's crypto, right? They will have an AirAsia app, and they will be shown as points or VIP points, for example, and that's all trackable. And the beauty of this for the AirAsia more than the end user is that AirAsia has a really clean log of audit trail of
Yeah.
which tokens used by whom for what reason, right? And then once you have the audit trail, you can't change it, you can't do anything like that. It's set in stone, right?
Yeah.
Set of stone. So I think that's where they would use it for me, like mainly for an audit trail than anything else, because otherwise they can achieve that one through web 2. They don't need web 3, but the web 3 where that's coming through is like for audit purposes.
Yeah. And so, I mean, I guess as with most of the things that we've seen come up from cryptocurrency, the regulatory uncertainty is something that could potentially, make or break
Yes.
this thing. Obviously, a lot of these issues are very complex. And, a real world asset, I think, takes the complexity to another level because you need to know blockchain technology, financial markets, the regulatory requirements. That
So
can be hard to juggle, I'd say.
if I ask a question, like say for
Okay.
example, right now these people who's using the AirAsia app,
Yeah.
right? Now they get these assets. They go around. They're just like, okay, they burn them or exchange for upgrades and all those things, right? Now obviously they have some sort of a value, and then so next year when the regulation comes along and there's like, oh no, now these ones X value and things like that, do you think that they will go back and charge people, or would they like, okay, like, oh, we're going to start from here? Well, how does it work normally?
I would say because it's a value, is this why they're considered securities? Anything that pays out a value or a dividend or is related to property and stuff. And I don't think that they would ever just cut that if the consumers, if the regulations changed it. This is obviously an assumption. I can't say this for sure, but they would not lose their value. And I think if it's a program that has been made by the company, you would assume that they would still honor these values. But I guess
Do you think you can go back and then charge people like for like, oh, you done this one, so, or the tax office, can they go back and say like, oh,
I
you've
think
been
if they're
dealing with
breaking any laws, I think
yeah.
that our laws still exist, and despite technology coming
Hmm.
a long way, we can still apply most of our existing laws to this. So if it's something that breaches tax, or if it's something that attempts to, find a sneaky way around an existing requirement that we have, then yes. I think with the things like real estate, I know that in Australia you have to have real estate in writing, sale of real estate. There's a whole bunch of things that you have to comply with when it comes to certain things. We're seeing, now they're looking at tokenizing things like real estate, stocks, bonds, commodities. And I guess one of the best ways to even look at tokenized assets is maybe even from the fractionalized state, taking a very valuable asset that normally would not be able to be available to smaller people and breaking it down so that you can provide entry into that. Because I know that in
100%.
America, I was just reading, they've tokenized $100 million bonds from the World Bank, and where is it? Goldman Sachs did that, and it was allowing people to buy for $1 million a part of that bond. And of course, that was only available to institutional investors. But I think that's their way of trialing it, the trial and error, and seeing what can happen with these kinds of things to eventually pass it down to retail investors. So I find that I'm thinking that unlike crypto and, NFTs, we're going the other way around with real world assets. I think that maybe it's coming from a place where it is more considered. Regulation is being considered more than just, it's not like the wild west.
Yes.
So,
and talking about that with Goldman Sachs, even JP Morgan, they did that. ANZ, those guys tokenize as well for a cross-border payment. So they tokenize Aussie dollars, like having the AUD, I think dollar, EAUD or something like that. So not the CBDC version, but so tokenize that the dollars so that they can do cross-border transactions. And I think company call was that BECG, Boston Consultancy Group. Now I saw a report from them recently that said like they said like in real estate, once you tokenize, there's potential about $16 trillion locked in tokenizable real estate. So that's like money that is waiting. And when you see that type of money for institutions, they're not going to just it's too hard basket. They're going to go after it, right? They're going to lobby again, lobbies, and they're going to go after to change the law so that they can release that locked liquidity.
Yeah, and see, just on that point, obviously, this is one of the very clear benefits that we can see. We know that the real estate market or property market is generally considered illiquid, but now you're opening the floodgates to creating a liquid market and make things more accessible, more easily traded. Now they're doing arts and collectibles in tokenized forms,
which is NFTs.
NFTs. But I guess some of the things that we would raise and the questions and the setbacks that we probably still need answers for is things like the valuations. Who's going to value it, and like based on what, and is it accurate, especially if it's an illiquid asset?
Yes.
And then we've got the, like you said, the custodianship. Where are you going to store it?
I think for the valuers, right, at the moment, who are valuing the real world assets, for them, nothing really changed a lot because they're still valuing the real world asset. And then once you tokenize it, then it becomes a more technical thing that is out of their way, because they know, okay, if the real world asset is 10 million, it doesn't matter what the token does, because token has to be tied to the real world asset. So nothing really changed in that sense.
But I meant like in terms of, imagine if we were to go and say buy a token fractionalized property in Indonesia or something, and we're buying it now, it becomes global, cross borderless and stuff. But you would want to know that that asset that you're buying has been, because it is attached to a real life asset.
Yes, and then that's why I think you need to bring in the trust factor. You can't say like in the blockchain, like I don't trust, verify. You can verify, okay, but you have that trust whether this platform has done the due diligence, because you can fake the documents, right?
And I think that's exactly why previously we read that you have to actually get it registered for it to be then have the tokens released if it represents a real world asset. So I think that's really interesting, because already they're preempting the things that could go wrong and putting things in place.
I guess this is not their first rodeo, hey, when it comes to assets.
And since definitely, that's why ASIC and everyone is involved with this. I think this is something that is a lot more within their comfort zone, because they have that established existing thing. But speaking of real world assets and the art and all of that stuff, what would you say is the difference between NFTs and real world assets?
Okay, so the NFTs, they're like, so everything's digital, right? So that's the first time that a digital artist could truly sell their artwork. Right. And before that, it was like, okay, there was never ever, because there was metadata behind that art piece graphic, but you can make copies of it, and you didn't know exactly how many copies really exist in the out there. But with the NFT, that's the first time now we can truly track how many copies of this true copies exist in the world. And that's what the difference with that's the NFT. And the real world asset is another version of an NFT that tied to the real world asset. And I think there's a middle person in between, and that's the trusted party. And that's a centralized party. So it's a combination of a decentralized technology with the centralized framework.
That's really interesting. So, what else?
Have you got any questions, Nathan?
Nathan's normally pumping us.
Yeah, Nathan is normally just sending us questions left, right, center. So when you come to, I got a question for you.
Yes.
So when you come to registering a say like I don't know, sneakers.
Yeah.
Let's pick something like that, right? Who do you register with?
Well, I think what they're going to do,
Hmm.
my view would be, is the best way to handle this and apply regulation and registration is going to be by them enforcing things on the platforms that are selling it. So I think that when it comes to property or even stocks and stuff, you'll need licensing and registration, which is normal, and disclosure requirements and market surveillance and enforcement powers. Those are some of the things I read previously, but I know that because it's going to be something that's representing a real world asset, I think you'll see ASIC's involvement, like you'll register it like any other thing, anything that's to be traded. I would definitely
look at
registration is definitely something.
So it's interesting that what you said earlier about the platform. So that what you're saying is like, so as an individual, I don't have to go and register this with any body per se, but I could send my sneakers to this, like the PSA, for example, who rates sports cards, for example. So this way I could send my sneakers to these people, like StockX, for example, and they, because StockX has a huge name in the space for what do you call, to differentiate between the dodgy and non-dodgy. I don't know what's the professional word for that. So I guess they could create a platform that could fractionalize. So StockX could create a tokenized platform, and I guess then it depends on StockX, wouldn't it?
Well, I'm
Rather
just
than
guessing.
myself.
I would just assume. No, I think that there's going to be like just, and this is, I'm just guessing, but I would assume that you'd have to prove ownership and everything first. Once you've registered that, before getting the tokens, before actually tokenizing, because it's a security, it's going to be attached to things like securities, then you're going to have to get it registered. That's when ASIC comes in. If it's something that is considered a security or pays out values and stuff. These are all just guesses. I mean, I've just, read here and there about it, but I think that that's the way that they're going to have the protection. And then another layer of protection is going to be that, like anything, they will regulate the easiest thing to regulate, which is the platforms that they're traded on, that the consumers are going to actually deal with. So
I wonder how, and I think probably, for example, now in Middle East, as a foreigner, you can't own real estate. And I have a feeling that the same laws will apply when it comes to real world assets as well, tokenization of that.
I would hope so, because we were having this conversation before, and we were saying, what would the world look like if all of these things that were in place, especially to protect, like poorer countries, were then sort of forgotten because they're tokenized in an attempt to make money, and you're selling land or property to people that are now globally able to buy. You could just imagine what that would result in. Like, you'd have so many people, buying out precious land in poor countries, and then, so many countries that are in conflict buying. And so I feel like regulation better catch up, because that's the kind of stuff that can ruin it for everyone when they don't, when they just jump in without considering regulations or what might be required in terms of compliance. Obviously, I think the anti-money laundering laws are going to be big, like counter-terrorism, all of that stuff. We're seeing that as a repeat topic constantly. Doesn't matter what it's for. Even NFTs, where they came down pretty hard on NFTs for money laundering. So I think when it comes to, I would say some assets are going to be more regulated than others. I would definitely say like land and property. We're going to see a lot of stuff like, but that stuff that is a lot more tangible, maybe not. Like, like you said, wine or art or anything like that, a shoe, surely there's not. But it's the same as our existing laws and principles, that if the law is quite, strict on an area, I think that we will see those kind of regulations feed through to any sort of tokenization. And that's why I think a lot of them are going to be centralized systems.
Yes. And so that way, I guess, by default, all these platforms will have a KYC.
Yes.
Like
and that's how they'll come down, regulate the platforms. So for them to allow even something to happen in their country, they're going to say, if you're the platform provider, and then I think property, you're only going to be able to trade it on that platform. You're not going to be able to trade it on multiple platforms. So I guess that's to keep things accountable. What's that question, Nathan?
Alrighty. So can tokenization be hacked? Look, I think if tokenization, it opens up for somewhat risk, because if you're tokenizing like a real world asset, if you make a mistake at that early stage of that physical asset being tokenized, say, I don't know, a long distant cousin of a cousin who says like, oh yeah, I own a piece of that. And when you're tokenizing something, you have to make sure that you have the blessings of all the owners, the true owners. And I think tracking that down is going to be the challenging part. So I think it's not a hack per se, but it could open up for more possibilities of, I guess, legal implications.
That's the problem,
right?
So
the hacking side of things, so I think once you put that onto the blockchain, and then if you have a system that is centralized in that sense, pretty much the end user is protected with certain security measures. Like before you can sign for something, you had to show your identity and your driver's license and all those things that we use in the real world. I think that way it could overcome those hacking potentials, and what's in the blockchain. So,
well, I mean, I think that Australia is definitely pretty serious about real world assets. I don't think it's something that they're ignoring or looking past. I think that ASX was actually developing a blockchain based platform to trade.
Yes, that's right. So they've been dealing for 10 years and they gave up.
But what are the other risks you'd consider with investing in?
Well, the real world assets, anything, investment is risky. First of all, just no guarantees when it comes to investment. So now if you are investing in things, they could go up in flames. For example, if you have these wine, for example, that you bought these tokenized wine, and what if that place just get flooded, for example, and you ruin? So you have to know exactly, okay, what insurance coverage you got, what
That's
is your
really good point.
Right. And thank you, I was just doing insurance.
That's actually really good.
And so I think having that information on chain, when you go into buying these tokenized assets, you want to know, okay, you need to know whether has it got the coverage, has it got the provenance, who done the authentication part. So I think once you do that, it's like anything, you're buying a car or you're buying anything, right? The real world. So there will be some risk factor, but you have to do your due diligence.
Are those things going to be built into smart contracts?
Of course. I think that, look, they will be built into smart contracts, but end of the day, it's what you put in the first place. That data has to be verified. Right now, the end user from the US, if it's done in US, and someone from Australia buying that token, they had to know, okay, the platform might even say like, okay, we do not take responsibility, right? It's this person. But I think platforms, as you said, if the platforms are the one who has the responsibility, guess what? I don't think they'll be able to shy away from it.
And so in terms of like the market risk, what are we going to see these tokens bought in? Are they like going to be paid in crypto? Are they going to be paid in?
No, I think these will be paid in CBDCs.
Because obviously the market is volatile.
Yeah, I mean, there will be
stable coins, maybe. I don't know.
Yeah, stable coins, and then it's only a stone. What do you call it? Throw away to to CBDCs, right? So I think, look, for them, they might bring, not they might, they will bring in CBDCs, and I think that's going to make it a lot more seamless, in a sense that the government knows, okay, who that money came from,
Yeah.
where it come from. Then some of that, what do you call, the counterterrorism and AML would be less, because you already know where the funds coming from. So
Nathan made a good point before when we were talking about this. We were talking about how can you confirm, and this is why we think it's going to be registered in a security body. But there was a time where they had paper-backed gold, and the banks were like, would give you a paper, and you had a paper to say that, basically a representation of you owning gold in the back. But then when we went to get it, it wasn't, you couldn't collect your gold. So what's to stop people from doing a counterparty risk?
Look, it could, it could happen. Whenever there's humans are involved, you are bound to get those types, because I think it's a greed which comes into it, right? And there'll be so much. I mean, like, at the moment, it's already happening at the moment in real world, where a house can get sold by the tenants, and the owner doesn't even know that the house got sold, until or the same property can get leased multiple times. Even in the contract, it says you can't sublease. So it's happening, or it's already happening, right? So those things will happen when it comes to this real world assets or tokenization. But I'm pretty sure we'll definitely find ways to cross those challenges when we.
And so for like the difference between a real world asset and a digital twin, what?
Digital twin, and I guess it's the digital asset is same as digital twin for me, right? The only difference is like the fractionalization. Now that's different, because the digital twin is exactly 1-to-1, where fractionalization is 1-to-many.
And I feel like a digital twin, a real world asset, I feel like can represent value, whereas a digital twin can just be a digital version of anything. Whether or not it's got value or not, like it can be.
I mean, like, I don't know. I think asset can be anything. Like, it doesn't, what is valuable to you might not be valuable to me, and it could be, I don't know, my, family crest, for example. That will be cool, actually. I should make a note of that one, create one for my family. So that could be something valuable to the hierarchy of the family tree, but not be valuable to anyone else. So I think that's why people say you can tokenize anything, and that's what you'll be careful of, not tokenize everything.
Because value is subjective.
100%.
So I wonder, do you think that we'll see regulations come in with real world assets, and like we'll get a definition of what an asset is? Like an asset class. Currently, we have asset classes. So we would assume if they're going to use the word real world asset, and a lot of their references have been into commodities, stocks, bonds, real estate, these are all asset classes.
Look, I
feel like that's the difference between NFTs and real world
assets. True. That's huge. I mean, like, for me, I don't know to comment on it enough. But I think the government is still going through that. I mean, you and Charlie had a podcast with Andrew Braggs, and what did you guys get out of that one? What did you any any alpha that you can drop?
There's actually, I think we're expecting to see regulation in the space 2026 apparently, but in terms of the real world assets, I don't think that was too much of the focus. I think they're still kind of, baby stepping into crypto in general. And again, their outlook was to regulate the platforms and to protect consumers from this. But I think that it's definitely within the purview of the government. Real world assets, like ASIC is working on it. A lot of people are looking into this space. But I mean, when I was looking before about what, if it's susceptible to fraud and stuff.
Hmm.
We have a list here where it says there can be fake assets.
Yep.
It's going to be a lot more susceptible to pump and dump
Mhm.
because scammers can artificially inflate the
Yes.
prices. You're going to have exit scams, smart contract vulnerabilities, custodial hacks. So I think, like you said, insurance, this is going to open a huge market for insurance.
Yeah.
Huge. Like custodial hacks.
Yeah.
This is like a new world of problems that we haven't seen until now, and there's always
Easily
money
lose.
to be made.
Yes, that's right. I think the more liquid an asset gets,
Yeah.
the more riskier it gets as well.
That's a good point.
Say for example, like if you have like a will, now it's not easy to get hold of a will and change it, but real world assets, it's all online, digital. Not everyone truly understands the infrastructure and how it all works. So in a place like that, when there's so many transactions happening, you're bound to get quite a few of them. And when those things happen, I think that's when the law changes. But unfortunately, there will be some huge sacrifices.
What I think is crazy is, like, if we look at the past 15 years, humans have just gotten so creative. Like, we're just getting so much better at making value out of things that don't necessarily always exist. Like, half the cryptos don't exist, like NFTs, just like new creative ways to make money or find away money. And real world assets have basically expanded this market even more. They've taken a valuable asset and made it. Do you think this is going to increase the value of existing assets because of your ability to sell
get
the
more,
same
like
thing to so many more
your
people?
audience, right? Look at your audience.
So what is that going to do? So, like, now we see that the crypto market is going to be worth around $1 trillion.
At the moment, it's 1.3, I think.
Is it?
Yeah, because it's 1.3. I think. Well, this morning it was. Nathan was pumping. So and I think it's going to go crazy because when you think about the like, one thing I would say is we're going to have a lot more access to these assets in developing countries, right? Say for example, if someone in developing countries, they could own an asset from another country for a small amount, otherwise they would not have access to. For 100 rupees, for example, or 1,000 baht, or whatever that looks like. It's going to democratize the access, and they might, whatever they might get like 50 cents every day, and that adds up in those countries. And that's what I think going to make the huge difference when it comes to real world assets.
I think what's really interesting is that majority of the interest in real world assets are coming from institutional investors. Why would we say that? Is it because generally right now what they have been successfully able to, toy with in terms of real world assets have been real estate, stocks, bonds, commodities? That's where institutional investors already are sort of.
Yes, it's because they've seen these for hundreds of years, right? They know the cycles. They know what happens every 10 years into property market. They know exactly what happens every 10 years into S&P 500 or FTSE 500. They know those patterns, so they're going to stick with those until. And then crypto, we don't know. I mean, like this morning it was 1.3 trillion. I don't know what's the value now in the markets, right? And these traders, or the institutional investors, they don't know these cycles. We are so new to it. We don't have enough data to create models when it comes to investment. So I would say once we get this into EFTs or real world assets with regulation like framework, guess what? Then we are dealing with the normal asset cycles, and that's also, and then they would be happy to take those investment opportunities to their clients.
What I think is going to be probably one of the most interesting things for me is knowing that now, like, crypto already created borderless transactions. Now, when we're talking about, if there's no regulations and now property and all of these things become borderless, we're going to have to. This is something that can really affect an economy greatly. Property, all of that stuff, stocks, bonds, everything. So we're going to have to see a much greater global agreements and global laws and a much bigger flow. Like,
Yeah.
I wish we had asked Senator Franks that. I think we did put the question to him about what does it look like when we have, if you can access these things globally and there's no restriction, then what happens at times of conflicts, or what happens when you have a country that, like, what kind of floodgates? Let's go a little bit dark without going
all right.
too
So,
dark.
things like with the USDT,
Yes.
they have been transacting. They have been sort of bit of news around that they have been dealing with one of the biggest failed property real estate companies in China. What's a big one
Evergreen?
called? Evergreen.
Yes.
Right. So things like that, and guess what? The American, the politicians, they own USDT,
Yeah.
right? And then USDT owns like Circle, yeah. So they own quite a lot. I think they're the fifth largest bondholder
Yeah.
in the US. So now they're coming up with some regulatory
Well, that's what I
thing,
mean.
like, okay,
because
if you're a politician, you might not be able to own USDT that has a national threat. So
Well, I think that's really reasonable. I don't really think that politicians should be able to have a vested interest in a lot of things, like things to do with war and weapons, but that's fine. We won't get into that here. But I think that's going to be the hardest thing to do, because when are we ever going to get, I don't want to say, I would hope to never have a one world government, but it's going to be now as trade. This is basically a new form of trade.
Yes.
It's a new market of trade. We're going global. There's a lot of countries that don't agree at the moment, and there's a lot of potential for this to go quite badly. And so I guess that's why, real estate and stuff are either centralized or only open to vetted companies. But I still feel like there's still potential for harm.
Oh, huge.
Not that I want to give
No.
that side, but I just think
Yeah.
when if we're being realistic, like, imagine if you've got huge investors in America investing in other places, or finding a way to go into a country that they don't like, crossing anything could happen. But
yeah. And I think, look, even those governments, right? They are trying to find a way not to lose out on this new wave. I think it has almost not passed yet, but on the brink of passing the technological barrier, and now it's becoming more, okay, let's not talk about the blockchain, let's talk about the asset stuff. Now anyone can own these asset classes, right? And with same thing happening when you look at the whole BRICS nations and the non-BRICS. So they're having their own settlement layer where they're not using the SWIFT layer. They're going away from. So what happens if you don't use SWIFT layer? You can't put what do you call sanctions on these countries, because they are not SWIFT based. So they're going to do settlements on different systems. So when we come to real world assets, how would that stop sanctions on countries and political parties and people? So we might say, okay, we're going to have AML and CTC things, anti-money laundering and counterterrorism act, but would that work on other settlement layers, or is it only working on our known internet? So
I think that there's a lot of potential for this technology, but I think, like, the more you talk about it and the more you get into it, and if you take a realistic approach, there's also so many things that, because of the technology, don't make sense unless there's stronger regulations.
Yeah, and I would like to see some balance, but I don't know what that balance looks like, right? Because at this moment the balance could be here, but then as the space grows, the balance could lie somewhere else in between. It will be hard to control, but as humans, we'll find a way, because end of the day, I think only a minute percentage of humans that creates problems for everyone. So I think as a whole, people are always want to do the right thing, and then people always find a way. I think we have gone through so many, actually not so many, I just lied. When it comes to money, right? When you look at how the dollar, the pound, and how they became superior currencies over the years, right? And it all depends on the politics and the superpowers, right? In a world like that, how can you and then you put cryptocurrency, and then in the cryptocurrency you got Bitcoin, you got Ethereum,
Yeah.
and you got Pepe, isn't it, Nathan? Right? Right? In a world like that,
Yeah.
how would you work it out? Okay, what is what? So I think, and then when it come to like you asked, like, okay, what currencies would they use when it comes to real world assets?
Yeah.
It's like there are so many unknowns at the moment, but I think it's really important to talk about those
Yeah,
and
and ask these questions
ask the
because
questions.
I mean we asked the question last week when we were talking to Senator Braggs, like if you have the CBDCs that you're introducing and they can be geofenced and they can stop this and they can stop that, what is going to happen at a time of conflict? Like what happens if someone, say, goes to another country and they're using CBDCs, or you're trying to buy something with your CBDC, or the money's coming from here? Like,
Yes, but then again, what would you do with the CBDC is normally what you do is you buy a service from a country, right?
Yeah.
Say, for example, now, if I go to India, I'm pretty sure you can do this, but you can't just go to a shop and say, okay, here's my Aussie dollars. I want to have that drink.
Yeah.
They would get it. They would obviously happily take it. But if an Indian national come here and say, okay, here's 1,000 rupees, I want to have that can of Coke,
Yeah.
they might not accept it, right? But they want to have that can of Coke. So I have a feeling people in India, what they might do is they had to use their Indian CBDCs
Yeah.
to buy some Aussie CBDCs, and then come to Australia and then spend the Aussie CBDCs
Yeah.
for the service. So I have a feeling something like that would happen rather than just
Yeah.
using that CBDC, because I don't think the Australian government wants to hold, I don't know, maybe I could be wrong, the Indian CBDCs and the Chinese CBDCs, the Hong Kong CBDCs, because at the end of the day, they want to protect their own
Yeah.
interests. So, and all right, we are getting closer to the
Yeah.
end.
Do you have any more comments that you want to make?
Any questions, Nathan? Do you have any questions for us? If you don't, you got 3 seconds.
Do
Anyway,
you own any real world assets?
not yet.
Not yet. Here we go.
Not yet.
Okay.
And I think we are not that far off. I would say maybe we'll be starting in about, maybe, I don't know, it will start about maybe 1 or 2 years.
Yeah.
It only takes the the bull market to start, and you'll see all those things that are, pretty much, we had this bull market for 2 years, like, almost, or more than that, maybe 2 years, maybe, that all this time people didn't just go to bed, right? They didn't go to sleep, right?
Yeah.
They've been building and trying a lot of things, because guess what, there is no noise outside.
Yeah.
So the builders can really focus on building and getting some meaningful solutions. So that, I think, that helped the builders having this bear market. For the traders, not so much.
Yeah.
Right? And then I think once this everything start heating up again, leading up to the Bitcoin halving around about April some point, I think a lot of these new projects, and the projects have been dormant, will come alive.
Yeah.
And then again, investors will see, like, oh my god, it is alive now, I think we can go and put money in. And I think we'll see all of that, and the Bitcoin ETF, and I think there'll be a lot more confidence in the market.
Yeah.
Pardon me. So that would and that should.
I'm actually looking forward to seeing what kind of use cases they come up with real world assets, only because I'm really interested in seeing the way they have the governance tokens, or how they produce the stock tokens and the dividends, and like how they're going to work around that. I think it's going to take a lot of really smart people to think about it. And I think we're going to see the same thing that's happened last time. It's going to have to get used a few times before we can really see what some of the problems are and fix it before it can really go mainstream.
What I would like to see
Yep.
is a tokenized Tesla car, right? So I might own like 5 tokens from 5 different Teslas, right?
Yeah.
And because of that, I will be able to order the Tesla. Forget about Uber, right? So the
Yeah.
Tesla car itself
Mhm.
will be everything. Like, so the Tesla car itself will earn money from
Yeah.
us. It will go to the service and pay the service using CBDCs, for example,
Okay.
and charge us. But because we have the token, we can call it and we have to pay the car. So the car itself will earn money. We'll pay for the service by itself. We'll pay for the insurance by itself.
Yeah.
Right? But then I don't have to own a car then. I can have 5
Nice-
tokens in 5 different
Nice
cars.
dystopian view. of the
It's going to
world.
be perfect. You watch, right?
So we
Elon?
don't need to have any cars anymore.
Exactly. You can say the driveway for Barbies.
That's $1 million idea right there.
Alrighty. So you do the closing, Maureen?
Thank you for listening to episode 58. We'll see you next week. It was Maureen and Kazu.
Woo! Thank you.
ya.
See you later. Bye.
Thanks for tuning in. We'll see you next week. Same time, same place.
Subscribe.